Hey everybody, welcome to week 144. It is good to see. Oh man, we got some treats for you today. And I have some really good news that I want to share with you. So a week and a half ago, I tested positive for COVID and I have felt like crap for a long time. The good news is I tested negative today, even though I'm still not feeling all that great. And the other good news is I tested negative for this new virus that's going around and it's hitting Washington, D.C. particularly hard. I have been free of any classified documents in my office or in my garage. So thank you, Joe. It is good to feel a little bit better, but man, I'm still not back 100%. Man, that is no joke. So the subliminally avert is very present with Jack Santaniello's background. So Jack, I know that you've got some stuff going on. We're going to talk about what is this debt ceiling fight, raising it, not raising it. What does that mean? What are the implications? He's got some thoughts on that. So does Adam. We'll still talk about stuff that's going on in the marketplace for you guys, interest rates, price of eggs, other things that you want to talk about. And by the way, we're starting to ramp into busy season in the CPA world, and man, there's a lot of activity going on. So anyway, Adam, before we get into Jack's depth of, he's got a dissertation actually going on the debt ceiling. So this is good. Adam, anything you want to say?
Yep. Wearing my clean juice shirt though. So no. So there you go.
Okay.
No, I mean, just, as we're rolling into actually filing tax returns for 2022, it's just, a reminder to people that there weren't really any material changes to the tax code, other than, in 2022 for bonus depreciation, you got to write off 100% of your asset purchases. Going forward, it's going to be 80% the first year and then the remaining 20% over the useful life of the asset. But what, just a heads up on what people will see is that they did adjust for inflation, all the brackets, which is, generally positive. They just slid everything, up, by about $1,500, $2,000. So, that's something, that kind of works in your favor. Same thing with the itemized deduction, it went up adjusted for inflation as well. So that's a long way of saying that, if you made exactly the same as you made last year, you actually are getting a little bit of a tax break. If you had a raise, then it may not have a huge tax consequence associated with it, just because they adjusted the brackets up for inflation. They adjusted the itemized deduction up for inflation. So that was a positive benefit, just to keep as a heads up. For the debt ceiling, I've had enough tirades about that. So there we go. I'll let a saner head prevail. You can't hear you, Gary.
Oh, sorry. I had a little coughing spell, so I had to turn off my mic. Papa Joe says Social Security payments went up as well. Thank you for weighing in on that. And thank you, Joe Gass, for your kind thoughts for me. And I appreciate that. One other thing that we heard this week too, for anybody doing R&D tax credits, you used to be able to take all that money kind of up front. Now it's been spread over 3 years. So not a favorable move for anybody that's utilized the R&D tax credit. And we have a lot of clients that have. So it's still a good thing. Unfortunately, it's spread over 3 years and you can't take it in one lump. Jack, I know you've shared with me this little article on the debt ceiling consequences, what does it mean, etc. So I'm teeing you up, baby.
Yeah, morning. So welcome everybody. And I thought that it would be prudent to discuss exactly what the debt ceiling means. I kind of did an informal poll over the past several days as to see what people thought at all ages. So my high schooler, my college child, and others in between and older. And interesting how there is general knowledge as to what it is, but maybe not so much knowledge as to how it works or what the hubbub is really about. So despite having a pretty good US history teacher in high school, he did not pique my interest to becoming a historian. So I'm going to read from information that I found on the internet. And actually, this was a pretty good article about the history of it. So I'm going to share that with you. So just very, very fundamentally, what is the debt ceiling? It's the maximum amount of money that the US can borrow cumulatively by issuing bonds. The debt ceiling was created under the Second Liberty Bond Act of 1917. The US government national debt levels bump up against this ceiling. The Treasury Department must resort to other extraordinary measures to pay government obligations and expenditures until the ceiling is raised again. And then they go into a history as to when it's been raised and lowered and fights and stuff like that. So they did give key takeaways. The debt ceiling is the maximum amount the US government can borrow by issuing bonds. Treasury Department must find other ways to pay expenses when it reaches there, or there is a risk the US will default on this debt. The debt ceiling has been raised or suspended several times to avoid risk. There have been a number of showdowns over the debt ceiling, some of which would have led to government shutdowns. Shutdowns are the result of conflict between the White House, Congress, and Congress, with the debt ceiling used as leverage to push budgetary agendas. So a little bit more of history, that prior to this act in 1917, Congress pretty much had free reign over what they wanted to do, how they wanted to spend, etc. So during World War I, it was created in order to make the government more fiscally responsible. By hitting the limit and failing to pay interest payments to bondholders, the US would be in default, lowering its credit rating and increasing the cost of its debt. It is currently $31.4 trillion. And then just quickly, some advantages and disadvantages of the debt ceiling. The pros: it holds the nation's finances in check. It can be used to fund federal operations. It improves efficiency in the government's ability to fund obligations, including Social Security and Medicare benefits, which is really one of the key things that is fought over as to, or implemented as part of an argument as to, we have to do, and it's used by both sides as to, well, we need to keep it, or let's just abolish it, kind of thing. The cons can be easily raised, encouraging fiscal irresponsibility, lowers the US credit rating, and increases its cost of debt. And there's even controversy whether the debt ceiling is constitutional. So fundamental issues with the whether it is constitutional. And then again, it goes into a different thing. So record highs of 31.4 trillion. Obviously want to raise that. The government has to find a way to fund all of these initiatives that they enter into, regardless of the administration, regardless of how you feel about it. And so, we get up against, and it's a game of brinksmanship, and it is, what are we going to do? And then they can put temporary band-aids on it and do some temporary borrowing, essentially, to kind of kick the can down the road. But at some point, they have to bite the bullet, meaning Congress and the White House, bite the bullet and establish what it is going to be. And there are differing philosophies, as you might expect, on either side of the aisle on Capitol Hill. And so, but again, I just wanted to give everyone a background as to the history and what it really is and what it means. So we can go from there.
Well, this is going to test anybody's Googling abilities, but Papa Joe brings up a really good question. What's the average level of debt of each and every US citizen? Whew, I don't know.
It'd be probably about $1 million if unless I got my zeros wrong. Be either 100,000 or $1 million, something with zeros, because I believe the national debt in trillions, is roughly on par with the population of the US.
I am so surprised you did not give the Dr. Evil answer to that question.
I'll give $1 million.
That's interesting. Well, the average American debt statistics show that it's like $96,000 is what the average American holds a debt balance of. 96,000. That's not obviously the national debt. That's their personal debt. It's interesting. Largely due to rising balance of mortgage and auto loans.
What I also have is some interesting information as to, we talk, obviously, I just said that there's differing perspectives on either side of the aisle. So to give you a little bit of insight into that, I can share, some quotes that, all right. So the prospect of negotiating a debt ceiling increase with Republicans is prompting warnings of economic ruin and chaos from the White House and Democratic leaders in the House and Senate. Democrats for days now have been fixated on only what might happen if there is no agreement to raise the debt by the summer, and not the far more likely possibility of agreeing to spending cuts at the federal level over the next few months in return for an increase in the borrowing limit. The Democrats' dire prediction started with Treasury Secretary Yellen, who told House Republicans last week that debt ceiling hike would likely be needed by June. She urged lawmakers to quickly raise the ceiling in order to allow government to keep paying its obligations and protect the full faith and credit of the United States. Chuck Schumer has been quoted as saying, if this happened, our borrowing costs would increase and every American would see that their borrowing costs would increase as well. I'm sorry, that's from Yellen. On top of that, a failure to make payments that are due, whether it's the bondholders or to Social Security recipients or to our military, would undoubtedly cause a recession in the U.S. economy and could cause a global financial crisis. And so on the other side, the Democrats' dire warnings have come even though most Republicans have said they have no interest in a default and want to use the need for a debt ceiling increase to pare back what they say has been excessive federal spending over the last few years. Various quotes that say that Democrats are vastly overestimating the danger of negotiations. This apocalyptic rhetoric over the debt ceiling from my Democratic colleagues is irresponsible and distracts from the real issue, the dire necessity of reining in our unsustainable deficit spending and preventing the catastrophic consequences of a sovereign debt crisis. So, and I could quote you a bunch of other stuff from both sides of it, and again, are we getting the Fox News version or are we getting the CNBC version? So,
or you really want to get on the other end, go MSNBC. Those are the two polar opposites.
Right. Yes.
That's why I like to listen to business news better. It's interesting if our government, which I think it started out that way, but man, has it slid. If the government operated by the same kind of principles that you and I have to as heads of household or business owners, hey, if you spend more than you bring in, you ain't going to stay in business all that long. There's a point when it just stops. I've seen that. It's not pretty. But in this case, hey, we're just going places with your money. Accountability should know no party affiliation. It should be a universal truth that we all embrace. I know that's Pollyanna and I know that's idealistic, but I just wish we could get back to that because common sense rules. It's not so common. Now, also, this is great. Shannon says, what do you suggest as best ways to move forward as a small business with this issue, continually facing this debt ceiling issue?
It's a good question, but so, as I was thinking about this, it's a great question because I was thinking about, well, what advice would I give people on this? Like, it's at the end of the day, it's out of your control. There's nothing we can do about it. I suppose you could write a congressman. I don't think that's really going to help. But so really, what we should be doing as clientele is really not too dissimilar to what we should have been doing anyway for kind of downturn / recession prep, which is just, make sure that you got some liquidity in your balance sheet, meaning like, maybe a little bit extra cash reserves or maybe a little bit more borrowing capacity, make sure the banking relationships are pretty secure. If you've been having a customer that's been stretching you forever, maybe try to get that buttoned up a little bit, so you don't have, some sort of catastrophic customer didn't pay you when you're planning on getting paid scenario. But that's really about it, because then, kind of the point of that type of exercise is that, whether it's a hurricane, a tsunami, or just a heavy storm, you got the boat prepped, for going into some heavy weather. And that's really what I would be doing right now, is getting the boat prepped for heavy weather. And you may blow right on by, but at least the boat is prepped for heavy weather. And that really comes down to, making sure your balance sheet's healthy. And balance sheet healthy is just a code word for making sure that, hey, if you kind of stress test yourself and said, if I had a 20% reduction in sales, could I survive that for, 6 months to a year, based on, cash reserves, borrowing capacity, cost cutting exercises that I could do. So it's kind of like, go back to the webinars that we were doing in, May of 2020. Same advice applies. Sort of be modeling out your worst case scenario, your worst case scenarios, which probably, kind of 20% dropish, and make sure that you got the wherewithal to be able to survive that. You got that, there's nothing more that you can do. Just keep on trucking, and it's my new catchphrase of 2022 or 2023. And I apologize about the language in advance, Gary, but if I have 1 foot in the future and 1 foot in the past, it means I'm pissing all over today. My point in saying that is that once you prepare, there's no sense letting yourself worry about it anymore, because there literally is nothing you can do about it. So what it's doing is occupying space in your brain, in your presence, that could be devoted to something that's way more. In other words, hey, Gary, let me ask this question. We've been, we're not spring chickens. You're a little bit older than me. I think Jack and I are pretty close to the same age. We've seen a few of these debt ceiling crises, and we've seen political nonsense. Has worrying about the debt ceiling ever made us any more money?
Nope.
Right. Brought us any more business?
Nope.
Well, there you have it.
You bring up a really great point. First of all, Shannon, this is her first time. She says, thanks for your answers. This is my first webinar. Can we access previous webinars? Absolutely, you can. Go to the BGW CPA YouTube channel, and all of these things for the last 3 years have been on there. So I think that's exactly right, man. March of 2020 and April and May had a lot going on, because the CARES Act wasn't even named yet.
Right.
But we had people that were freaking out, and rightfully so. But I'm going to give a shameless plug. If you are a BGW CPA client, business client, then you have access to our vault. And so the Cash Flow Academy, there you go. The Cash Flow Academy has a bunch of really good videos. And it also has our best tax advice and tax academy, etc. We've got a bunch of stuff there, but we don't charge for clients to have that. If you're not a client, yeah, we charge like $2,800 a year to get into that. But take advantage of those kind of things, because they're really good, and they're done by Adam and other folks on the team. Let's see here. So hopefully that is helpful. And I think you're right, man. I mean, when we think about what we were talking about in 2020, March in particular, the sky's falling. We don't know, everything's getting shut down. Oh, it's only going to be 2 weeks. Well, we saw that wasn't the truth. But all kinds of hell is breaking loose. You can't work, you can't, but you got overhead, especially, I mean, one of our large clients, a big dental practice, they've got a lot of dental practices. Well, a lot of overhead, a lot of real estate, and nothing's coming in. What do you do? Fortunately, PPP came in, EIDL before that, but being prepared to do what you can do on the front end and tightening up your cash cycles to where you're getting paid sooner, maybe string out your payments a little bit longer. You got to be careful on that one, though. That's a double-edged sword. GE was a client of mine a long time ago, and we were a smaller company, but they're the behemoth, and man, they were stretching us 90 and pushing us to 120 days. Well, that as a small company, that's just cruel and unusual punishment. And it was kind of like what we had to deal with a big behemoth like that. But nonetheless, cash flow makes a big difference. And make sure that you're talking to your bankers now before the crap hits the fan. It's like too late. Make sure you've got good relationships going on there. Also, I'm going to put in the chat, I'm going to send this to everybody right now. There's a Survey Monkey that I would love you guys to fill out if you would. It's like two questions or something, but about the kind of topics that you want us to continue on with. Yeah, it's fun to kind of take shots at Washington because there's plenty of craziness on both sides of the aisle, and they're just, it's so dysfunctional. But at the end of the day, what do we do? Yeah, we can talk about it and poke holes, but what do we do? Because you guys are the economic engine of the country, period. It ain't Bank of America. It ain't Wells Fargo and Duke Energy. Yeah, we're glad that they're here, but that's not the economic engine of this country. It's people like you that are busting your butt, making a way for yourself and others. And there's so many good folks on here that are kind of mutual clients of Jack. And it's just, here's one other thing that I'm going to say. I'm wearing my 704 t-shirt. I love those guys. They produce really cool t-shirts and stuff. It's a local little company in our building at 1616 Camden. So I like supporting those guys. But there's this guy that talked to me last week, and he didn't realize how interconnected this city is. And he seemed to be content on throwing flame bombs at people. And I'm like, dude, this is a small town. He goes, no, it's a big city. And I'm like, well, what you don't understand is it's extremely interconnected. And that's one of the reasons I love this city. It's extremely interconnected. There are so many good people here. And yeah, there's some ne'er-do-wells. But you got to be careful, like who you're trashing and how you behave, because it's a small town. And I look at this participant list of all the people and I just smile, because so many of you guys, we have so many connections through and with you guys, and multiples across. It's just it just reminds me of the tapestry of this city. So anyway, enough of my rant on that.
So some supplemental thoughts. First, to Shannon's question about accessibility of prior webinars. So you guys have on your YouTube the entire library of those videos, prior videos. On ours, there's a link on my bio too, and what I try to do is group them into subject areas. So when we're talking about the anatomy of a deal, etc., I don't have the prior stuff on there, the PPP stuff, because I was thinking that, okay, kind of the time has passed, but had not really thought about the fact that there are a lot of gems in there about how to prep for catastrophes, and the catastrophe that we were going through or about to go through. And at that time, we didn't know the extent of it. As far as prepping, let's assume for a moment that we wore you down in our advice, or I shouldn't say advice, because we're not giving legal or accounting advice on this program, right? So the
You are such a lawyer.
these suggestions, I was thinking about that last night. I was like, gosh, I haven't said those words in a while. This is not legal advice. This is just blah, blah. All right. So ditto. And that so let's assume that you took our suggestions and you are in a position to get through this recession, or not recession if we don't get that far. If the economy actually doesn't actually go backwards, it's continues to just maybe comes to a standstill. But so I've seen opportunities from clients, either as a seller or a buyer, or some sort of consolidation of their business, that they're able to, and they are either reaching out or being reached out to by others who they had been talking to in prior years about selling, buying, consolidating, teaming up. And so I am working on more of joint ventures, and I use that term in lowercase, in that it's many times the form of some sort of merger or a purchase, that there is someone that is getting out of the business, and some others that feel like this is the right time to get out. And so think about that as well. Like if you do have and you have been thinking about, or have tried to knock on someone's door to bring in part of your production process, or bring something in-house where you were outside using outside vendors, except for legal services or accounting services, always go to your external resources and service providers for that. But otherwise, think about those opportunities, because I think that we kind of forget about those, and go knock on those doors. The worst that they can say is no. And it might be that you get a good deal, or it's just the right time to do those things, and reinitiate those conversations. So just something to think about as well.
Hey, I'm going to bring up one other thing, and this has to do with some chatter going on with the IRS and new regulations. So this is IRS setting out new digital asset filing guidelines. So if you've got digital assets, you got to answer that question on the form. So just for what it's worth, and hopefully you weren't part of the FTX mess. Dang, man, if anybody watched The Big Short? Oh my gosh. So I think that's the one that was about the whole collapse in 2008, where everybody, right? Is that right, Adam?
Mm-hmm.
Yeah. I lived through that demise where our PE firm blew up and $30 million worth of us got wiped out. And it wasn't tied to that. It was tied to other things. But, what a freaking mess. I encourage anybody to go watch The Big Short. I don't think, the good news is in this economy, from what I'm hearing from the bankers, we don't have, crazy out of control leverage in the housing market like we did at that time. But seeing this whole FTX debacle and what's going on with that, I mean, it has this, there were funds of funds and all kinds of crazy stuff that get into that. I hope justice is served in that one, man. Let's see.
Hey Gary, there was a question in the webinar, in the chat, sorry, by Bruce.
Yeah.
That came up, and you may have missed it. So if you want to go back to it, he was asking, is there any indication that the administration might begin involuntarily initiating some cost reductions that will be very painful to the public to force action before the June brink of collapse? I mean, we kind of talked about that a little bit, but maybe not specifically as to.
I did not see that.
And it was in the also in part of these articles that I started out with at the beginning of the program, that yes, there's a trade-off in that a lot of times what we've seen historically in these debates about the debt ceiling is, okay, we'll increase the debt ceiling, but that doesn't give you license to go spend it. We need to figure out how to lower cost, even though we're increasing the spending because it's specifically for certain things, which is a way of saying it doesn't have to be same as before. If there are some programs that are dying on the vine, let's not throw money towards that. Let's be economically and fiscally responsible to go back and look at things that have essentially been on remote control, on cruise control for a while, and see if there's ways to adjust that. And so, but they say that in one hand, and then we talked about pork spending and all the stuff that gets thrown into a particular bill. For example, the Reduction Act, Inflation Reduction Act. If you peel away the layers, you're going to see a bunch of stuff in there that has nothing to do with anything, including, as we talked about previously, there was one a celebration, a retirement celebration for an older member of Congress in his hometown, but we funded that as taxpayers, essentially, if you want to look at it that way. So all that stuff's in there. And it, again, depends on who you're talking to, which channel you're watching at the time.
So Andrew, you asked the question, what's the definition of a digital asset? And it's about digital asset income. So it can be crypto, it can be NFTs or non-fungible tokens, which still kind of blows my mind. I mean, there's so much of that I've got friends that have made really good money in that. I also have friends that have lost money, but so you know, but it still blows my mind. It makes me think of all the crazy stuff when I was running a .com in 2000, when before the bubble burst, the more money you spent and lost on sock puppet, Super Bowl ads, the more crazy your valuation was on those companies until the music stopped. But it was so crazy that it made me think. I remember going to Ray Shaw one day. We'd spent $1 million with competitor. They were spending $40 million a year burning, not even 1 million top line revenue. And they sold to NBCI for $225 million right before the crash, a couple months before the crash. And I came back and I was with all these guys and I'm like, this is la la land. I said, Ray, I started thinking, are we crazy for trying to run things like the way you should, where, it has to actually be more income coming in than what you spend and all that? And because he was a very conservative operator. And he goes, Gary, this thing's unsustainable. And anybody that didn't know Ray Shaw, he was the head of Dow Jones and Wall Street Journal before he took over and bought all these business journals around the country. Well, sure enough, I mean, a couple of those guys at the top of that company, they did extremely well. Everybody else was wiped out. So hopefully, Andrew, that answers your question on the digital asset, but it's like, man. And it's interesting too, Joe Farrell says, Jamie Dimon responding to my question on his recent visit and Q&A in Charlotte is not a believer in cryptocurrency. That's the JP Morgan Chase position. Interesting.
Although I wouldn't be surprised if people's thoughts about digital asset, for those of you who have teenage boys, is that here's the following scenario, which is, what do you mean you want to take your allowance money and pay some gaming company that money in order to get fake money in order to buy more weapons, more vehicles, etc. So that was the extent of my digital asset knowledge until recently, essentially, relatively recently in the scheme of things.
Yeah, fortunately, I missed that one. My kids being in their 30s. All right, well, this has been a pretty interesting discussion today, guys. I mean, we still got some time. Nice group, 29 people on today. It still blows my mind after 144 weeks of doing this that we still have such a good group of people that are interested. And as long as we're delivering value, man, we're going to keep doing it. You guys do have free reign. I mean, you've got two of Charlotte's best with Adam Boatsman and Jack Santaniello on the line for tax strategy and legal non-advice.
All right, and I'm going to go off on a random tangent. It actually isn't really a tangent. It's kind of rewinding the tape a little bit, and it's something that I had, but we never got to it when we were talking about leadership and those kind of things. But it was an article that I found in my stuff that I forward to have material to talk about on our seminars and our webinars. But it is called The 5 Habits of Top CFOs. And I don't see a copyright on it, but I think it was relatively recently, may have been at the end of last year. But so I'm just going to tell you what the 5 habits are, and then we want to discuss it. But again, some of the well, duh moments, that word will probably go through your head as you're hearing some of this stuff. But I think sometimes it's good to be repetitive and hear it. And that way we think about it, and we think about how we want to implement our leadership in our respective organizations. So number 1 is adhere to a code of ethics. Importance of promoting and maintaining the highest ethical standards across the organization, working with controllers, meaning management, to insist on full compliance with regulations, accounting rules, etc. And again, this is slanted towards CFOs and accounting and money and everything else, but I think that it has a broader application across, and we talk about culture. We've talked about culture a lot. And so this goes into all of those things we've talked about. Build and maintain relationships inside and outside the company. Top CFOs extend this action to their teams, basically empowering them to kind of go forth with the message as well. And I think we've talked about this before, and I take purposeful effort in trying to build relationships at the associate level with others. So for example, I strive to have our associates meet the younger people at BGW and others in the industry, whether they're bankers, et cetera, to build those relationships. But and then you need to obviously build the relationships inside the company as well. I tend to sometimes close my door a little bit too much, but I have a sign out there that says, please come in. And then the flip side says, do not disturb, kind of like one of those little signs that you put on your hotel room when you don't want to be disturbed. So that makes me feel better that even though the door is closed, maybe, the people can knock and come in. Number 3, spot and advocate for opportunities, not just against risks. It's always easier to say, okay, where are the problems going to be? Where are, let's fortify our defenses in order to be able to deal with things. But as far as opportunities go, as we just talked about a few minutes ago, if you're in a position to go and seek out some efficiencies of scale, or maybe it's time for you to bail out. So, think about that. And number 4, develop and nurture and trust your team, which we sort of talked about already. And then always be attuned to what's next. It's very easy for all of us to be blinded by what is in front of us and not see beyond the horizon. And it's just, we are all very busy. I cannot believe we're 1 month into the new year already. And that time has flown by. And so you need to think about what is down the road. What do you want to happen 3 months, 6 months, even next year. So by the end of this year, what you want to happen, because you're already 1/12 of the way there. So just think about those things as well. But I wanted to share this with you because it's something that I had and wanted to share at that time, but I think it's important, and it distills down some very important principles, not just in the accounting financial arena of a company, but just overall culture.
Oh, Joe Farrell brings up annual SWOT analysis, strengths, weaknesses, opportunities, and threats. Absolutely. It's worth doing, and not just doing from the ivory tower. Ask the front line. They are more attuned to the real issues. That's one of the things that I'll never forget. Hugh McCall walked he walked among the troops. And my first day at Bank of America, Helen Eggers told me, she goes, here's some idiosyncrasies of Mr. McCall. We're Nations Bank, not Nations, not NB, blah, blah, blah. And here's some idiosyncrasies. But she said, if Mr. McCall walks the halls a lot, and if he stops you, he's genuinely interested, just don't BS him. He could smell it a mile away. And that's so true. Good question, Caleb. Good to see you here, bud. Need to have you back out of the man cave some Sunday afternoon when I'm back again and well enough to do it. Any thoughts on AI's increasing growth and integration within the business world? Well, I'll give you an example.
Go ahead.
Go ahead. No,
I was just going to say they, I hate to say this, but because it's going to show how nerdy I am, but I'm into like the sci-fi stuff, but I know Adam is too, so it's okay. But, you think about all these, okay, Battlestar Galactica, Terminator, all these that we build it and they will destroy us and become sentient and everything else. But the reality is that we rely upon artificial intelligence all the time, more so than I think we realize. And as far as, so recently my voice recognition for dictation on my computer, which is not Siri, was updated, and it was the computer interpreting my what I was saying and my corrections that I've made, and then the next time it's going to put in the proper word instead of what it thought I was trying to say. So that's a smaller form of AI, but it's just all this stuff that goes on. You were talking about, you not having any classified papers at your residence, right? And so I was thinking, I was going to type something into a text message about just a joking, kind of disparaging remark about that topic. And I'm thinking, okay, Big Brother's listening. I better not. I don't need the FBI to be knocking at my door. So, and it really did kind of influence my behavior of not to do that. But that is artificial intelligence being implemented, right? So that was my comment about that.
Well, I know this. There are some automation, and it may not necessarily be artificial intelligence, but there's a group in town. It was called Anduin, and I'm trying to remember what they rebranded it to. I can't remember, but it's a pretty cool technology company, and what they started doing. And so we were a beta site with Clifton Larson Allen as well on just shortening the payment cycle and on accounts receivable. Well, it's a very cool thing. I mean, it's helped us, and it's been a blessing, and they're expanding it. So, I mean, that's in there. We're also talking about RPA, robotic process automation, on some of this, these dumb terminals where you think about the robotic or just the repeated manual entry of stuff, repeat on processes that have to be done by people. Well, if it's a repeated process, a computer can actually do that. And so we're checking into some more of those kind of things as well. So I think those kind of things. And one thing that I would say, Caleb, you asked for it. Oh yeah, Joe would know this. Loan processing has been using AI for years. Yeah, you would know that. The one thing that I'm not a big fan of AI is in recruiting. There may be advantages, but I can tell you firsthand, I would be rejected for every job that I've ever had. Just would, and a CEO that I supported for a long time, she was the #1 female at Deutsche Bank and retired early. And, she had a 2-year teaching certificate. She would have never been brought into the position that she held at Deutsche Bank. And we were talking about that, and talking about how the screening criteria for these big companies would, they would have thrown us out. And so I would just say, don't lose your head, use common sense too. And the other thing that I think is the other thing that we can never outsource, and that is building one-on-one important relationships. The more things become automated, the more necessary it's still to maintain human to human interactions. That's how you build trust. And that's how you get cycle time shorter, by helping people solve problems, by being able to know who to call for what, and that comes through relationships. I don't think you can outsource that. So enough of
Can
my,
I share a secret? Can I
Yeah.
share a secret? Okay. So, talking about automation and artificial intelligence, this is more automation and annoyance, but so did I mention this last week? My son filed his first tax return. He's a minor, so apparently I was supposed to co-sign it. I didn't know that. And but he files it, and he's getting a little bit of money back, like all of the money that he paid in taxes, because he doesn't meet the minimum compensation level. And so got this letter back because it's a first-time taxpayer that said, and it's to protect against fraud and to show that he's an actual taxpayer. Now, next year, hopefully there's not this problem. And so they said, call this number, and call the number. I found another number, and it just, you spend 4 minutes on it, and then eventually get to the recording. We apologize, but we are experiencing higher call volumes than normal, which is untrue, because the new norm is that is just what it is, right? And so I'm getting frustrated, waited months and months and months. And then I was like, all right, let me try something different. So I called the local Charlotte, one of the local Charlotte offices. And I tried to stay within local, because if you push the wrong button, they throw you back into the masses, right? And so I finally got to a person live, and then talking to her for about 7 or 8 minutes, she's like, well, I need to put you back in touch with these people. I'm like, oh, no, please no. Because I said, I've already been behind gate number 1, and I need to be beyond that. She's like, no, this will get you to gate number 2. So anyway, and it worked. And I finally got through, and they asked me for everything except for my blood type. I mean, they asked some pretty particular questions. Like, they asked me, and you guys would appreciate this. They said, what was your total estimated, your 1040, the sum total of your 1040 ES payments for 2021? And again, because I'm a nerd, I have a spreadsheet, and I looked at the spreadsheet, and I told them, and they were very impressed. Like they were surprised that I had that answer, but I had it for them. But anyway, just something to consider. So a little secret, that call the local office, and you might be able to get through the IRS, but don't tell anybody I spoke to that. There you go.
Yeah, that's really good. Hey, Skip, I'm so sorry I missed you. I skipped you inadvertently, but here's his question in the chat. Have you talked about what the culture of your company really is, how to know what your employees and clients would really answer? Well, that's the foundational question. It's one thing to have it plastered up on the wall. It's another thing to know, am I hiring and firing based on those core values and the culture? And I think you're right. You've got to go, and you've got to get a broad cross section, just like in anything else. You're going to have people that are raving fans, and you're going to have people that think that you're village idiots. But you got to look at the, not just the extremes, and take the balance. But that's a really good question.
Yeah, we spent a lot of time talking about culture in prior webinars, but I guess, kind of like I don't know if we really talked about how do you sell it and how do you monitor it? Like, is it working, kind of thing? And it's interesting because I've had people tell me, clients tell me, I think my employees see what it's like over there, and they think it's better over there, but they don't know all the bad things that are going on over there, because they're getting the Facebook version of what is over there, and hearing, unless they have someone over there that really knows what's going on and can get the good and the bad, a very balanced story. But there is, I want to say, culture envy. I wonder if I should copyright that. Culture
envy.
I
like it.
Yeah. Along with legging future and past and what happens to the present, kind of thing. I think we should copyright that as well. So, but just keep that in mind too, is that, and we didn't really talk about that a whole lot, but yeah, it's put it in place, and because everybody thought it was a great idea, but then not doing the looking over your shoulder and seeing, and really getting down in the trenches, like Hugh McCall used to do, which is go down and ask people. They'll tell you, but only if they trust you. I have counseled CEOs, owners, that, okay, are you approachable? Because I can see that you're not. I approach you because I'm you're my client and I'm going to tell you how it is. And even if you get grumpy with me, I'm not going to, back down unless you get me to back down. But it is that, are you approachable? And there have been cultures that over a period of time, people are done with banging their heads against the wall and getting bloodied foreheads, that they're just not going to go through that anymore. So as a leader, you need to be mindful of that, yeah, go. And if you don't have the ability to walk amongst your troops, find a way to do that in a trusted way. And it could be putting an anonymous a suggestion box somewhere in a public place where they can just drop stuff in, and they can, cut out letters from a magazine if they want to, or type it up, whatever they want to do in order to remain anonymous. So good thought and good suggestion.
Yeah, that's good. Papa Joe. Would Adam share his red phone number to the IRS?
Yeah.
No.
Although it's actually funny, I called this morning and I actually got through, but they did something that was very interesting that I hadn't heard yet. They made you, going back to the AI conversation, they made you repeat back a phrase that they said that would eliminate all the bots that have been calling the number and getting on hold. So I shockingly at 8:30 this morning, I got through in 5 minutes, but no, I will not share, because you have to give your CAF number, social security number, and birthday to be able to get back on get through on the bat line.
Wow.
Still didn't get done when I needed to get done, but that's a different story. I was just happy to get through.
I'm going to volley back to the culture conversation. This is interesting. I don't know what prompted me to write this last night, but I did, on a Mr. Untouchable. And this is where, you've got somebody that isn't necessarily embezzling or committing sexual harassment, but they run by their own rules. They kind of run roughshod over everybody else, and yet management allows it to happen. And because I've seen it, and there are two business CEOs that we know that we talked about this is in culture, and we're talking about, what do you do when you have somebody that is offending your core values, a repeat offender, but they're, a star performer in other aspects. And in both of these cases, I said in the post that, they were over 50% of their revenues were tied to these individuals. And in one case, it was over 60%. And in both cases, they ended up firing the offender, knowing they were kind of being held hostage by what I would call Mr. Untouchable. And in both cases, the culture rallied around the CEO. And they took a short-term hit, but then they rallied together as a team, and it became this galvanization point that I thought was really, really powerful. And it's really hard, why there are all kinds of reasons. It can be nepotism. It could be, that they control key accounts, or in those two cases, they had like 50 to 60% of the revenues were kind of tied to them, and they just got away with bad behavior. But there's a guy on here that responded. He had been a CEO, and he said, "Gary, I wish I was more talented at this. I would like to believe I was courageous, but I reached out to every manager I terminated and met with 90% of the 37 I fired. And this is really touching. He said, I apologized for not being the leader God intended me to be, and apologized for failing them. Honesty and humility were very hard for me at that time, but out of the 91% of the 37 former associates, all but 3 accepted my apology and offered me forgiveness." And he says, "Feel the fear and do it anyway. It was worth it for me." Interesting. And Joe, yeah, you're right. Worst form of cancer in the company, they have to be removed, the Mr. Untouchables. And it's not just, I said Mr. because I've seen it where it's more frequently men than women, but there, I don't think it's a gender discrimination. I think it's a heart issue. So, and Joe, no, this is not a new t-shirt, but I haven't worn it for a while, but I do like the 704. Oh man, well, any other questions? You guys have anything that you want to talk about? It's on your mind from tax standpoint, legal standpoint, structure standpoint.
Maybe
I'll
just
give-
one thing, a reminder that as of January 1st, if you have a DBA and you filed it previously in prior years, I think it's more than 5 years ago, then you have to refile that with the North Carolina Secretary of State, or technically it's not valid. A couple of things on that. Understand that just because you have the legal name or a DBA does not translate to you having a monopoly on that name in the form of trademark and intellectual property protection. That is a whole separate legal issue. Sometimes they interact and intersect, but keep in mind, and I encounter that a lot, both being on the offensive side of things, like basically telling someone else to quit using my client's mark. And then they come back and they say, well, you know, we formed a legal entity in the state of Ohio, so we should be able to use it. Well, no, that isn't how that works. Or being on the defending side of that and getting a cease and desist letter and having to tell a client, yeah, they're right. You got to stop. You got to do something differently, or we can contest it. And sometimes we do, and sometimes we don't, because we would lose. So just keep that in mind as well.
That is a good bit of legal insights, not advice. Man, I do like your thematic background, Joe. I mean, Jack, it's quite good.
Yeah, I'm fortunate to have some good people in our business development marketing group that can whip this stuff together. So trying to keep it
Well,
interesting.
yeah, that's good. Interesting, back to early on in this conversation, Joe was asking specifically about the debt that each American is carrying. And so with my Google expertise and ability to Google that answer, that was the answer he was looking for. So both of us think that you should be giving me a Shumaker Starbucks card. I'm just kidding.
You did get my Christmas present, right? Both of you in the mail? No?
I'm trying to
I
remember.
did. Thank you.
Okay.
I'm sorry.
It was a similar thing. It was a card.
Yeah.
Yeah. Okay. All right. We'll talk about that. Someone stole
Yeah.
yours, Gary. Maybe Adam took both.
Could be.
Yeah, there you go. I'm still a little foggy, man. It like this COVID thing is weird. So weird. Don Mingus told me, he's like, dude, go buy yourself some of these Vicks shower vapor showers or something like that. You know, you put this tablet on the base of the drain and just let the steam, you know. I'm like, well, this is crap. I can't, like, it's not doing anything. Well, the issue is I haven't been able to smell anything. That's the issue. So
In
anyway,
some cases, that might be an advantage depending on who you're around. So yes.
Hey,
it could be.
you know, my advice, Gary, is, you know, take a bath, then wrap a hot towel around your head. Make yourself a soup. Get it out. Jack's laughing. He knows what that's from.
I'm not nearly as good at TV trivia or movie trivia as what you guys are.
That'll be next week. We start it off.
Yeah, man, I missed this completely. Is there any indication the administration might begin involuntary initiating some cost-cutting reductions that would be very painful to the public to force action before the June brink of collapse? I think you addressed that though,
Yeah.
Jack, right?
Yeah, we talked about that a little bit. Sure.
Sorry, Bruce, I missed that. Hopefully next week I'll be back to 100%. Kind of not firing on all cylinders right now, but Anyway, well, we're at the noon o'clock hour. So if anybody came into this thing late, we will put it up on the BGW CPA YouTube channel later on today. Thank you guys for taking time to be with us. Jack, tell your crack marketing team that they did a good job. And Captain Adam with the ship's wheel behind him.
That's
You
right.
keep doing what you do. All right, guys. Have a wonderful rest of the week and weekend.
Cool.
Thank you.
See you
You
guys.
too.
See y'all. Bye-bye.
Bye.